And what this means, we're joined by Craig Alexander, Senior Vice President and Chief Economist to TD Bank Financial Group. Craig, on Wednesday, Toronto Dominion Bank lowered its rate for a 6-year mortgage to 3.79%. Today, BMO announced it's going to offer mortgages for 2.99%. What's going on here?
Well, I think what you're seeing is some increased competition in the marketplace at a time when the Canadian housing market has been cooling down. Last year, home sales slowed to a very gradual pace of increase, although prices were still up significantly. And I think what's happening is that as we're heading into the new year, we're expecting to see the housing market continue to cool off. And this is, I think, creating some additional competition between the financial companies. The other dimension, though, is that the cost of borrowing for banks has decreased because of the European financial crisis. Remember, late last year, there was a lot of concerns about what was going on in Europe. This led bond yields to go lower, and when you look at the relationship between 5-year mortgage rates and 5-year Government of Canada bond yields, you'll see that the two generally move together. Bond yields will decline, and then mortgage rates will fall. And this is, I think, part of the story. So it's a combination of lower cost of borrowing for financial institutions, but also increased competition in a cooling real estate market.
And also those banks want to have more customers as the housing market apparently is going to cool. Does this lowering of mortgage rates, though, contradict government warnings that Canadian homeowners should put their financial houses in order because higher mortgage rates are coming?
Well, Canadians do need to be prudent. We do know that eventually interest rates are indeed going to head higher. Having said that, I don't think the Bank of Canada will be raising interest rates this year. So I do think that we are going to have a continuation of remarkably low rates, although I'll be honest, I don't see rates coming lower than they are today. Unless we actually have a banking crisis in Europe, and if that was to happen, I think that the Canadian economy would do much worse, and rising unemployment would, have an offsetting impact in terms of, rates might go lower, but the economy will be doing worse. So I think that interest rates are about as low as they can possibly go at this point. But I do think Canadians need to understand that over the next several years, ultimately, interest rates are going to have to go higher by several percentage points. So make sure you don't take on financial obligations you can't manage when rates are higher.
Yeah, good advice. And you've answered this question I'm going to ask you very nicely, but I'm going to ask the question again from a different angle this time, Craig. Because the rate for taking out a mortgage is now so low, does that open the door to the government now to raise the prime rate that mortgages are based on?
No, I don't think the Bank of Canada will be raising interest rates. I do think, though, if we see the housing market strengthen significantly in the coming months, I'm expecting a relatively flat market, but if we actually see Canadians leap out, run out to take advantage of the low interest rates, and we end up with strong housing markets, I think it does raise the possibility that the Government of Canada could shorten the maximum amortization period on mortgages from 30 years to 25 years. And I would note that when the Bank of Montreal introduced this record low mortgage rate, they did in fact limit it to a 25-year term.
Craig, I've only got a couple of seconds left for this. TD, BMO, other banks likely to follow suit?
I would say that that's the historical relationship. Once one bank lowers rates, others follow suit. The one thing that could break that pattern is the fact that the Bank of Montreal lower rate is actually only available for a couple of weeks.
Right, less than 2 weeks. In fact, until 25th of January. Craig Alexander, Senior Vice President, Chief Economist, TD Bank Financial Group. So good of you to talk to us. Thanks, Craig.
It was a pleasure.